Hi, I'm Steve Bigger, Director of Equity Research for S&P Capital IQ. Welcome to this week's edition of Equity Analyst Forum. With me today on Equity Analyst Forum is chemicals analyst Stuart Benway. Stuart, welcome to the program.
Thank you. It's good to be here.
So this week's focus stock of the week is Eastman Chemical. Can you tell us a bit about the products they produce?
Yes, well, Eastman Chemical, as you might know, was spun off from Eastman Kodak, 20 years ago. So it was got its start as being a chemical producer of photography chemicals. But now it's a diversified company that makes a variety of materials, fibers, and products used in plastics. And it doesn't manufacture its own end products. It makes products that other companies use in their products. Some of the products that use its products are paints, baby diapers, cigarette filters, housewares, and medical devices. The company has a diversified geographic base with more than half of its sales outside the United States. It has leading market shares in most of its businesses, and the company has a market capitalization of about $12 billion, and we expect sales this year to be just under $10 billion.
Okay, so most investors may not think of chemical companies as growth opportunities, but so where do you see the growth coming from?
Yeah, Eastman has really changed its portfolio over the last several years. It sold or divested several businesses that were more commodity oriented, had variable margins and unpredictable margins, and instead it has, through acquisition primarily, added more stable businesses. But as far as growth goes, it has several product lines. One of them is it's a product called Triton copolyester, which is a very durable product used for housewares and medical devices. It doesn't haze or crack or chip, and it is taking share away from polycarbonate, and the company is adding capacity in that business. Another one is hard to say, but it's useful, and that's non-phthalate plasticizers. Plasticizers are used to give plastics the desired flexibility, and non-phthalates do not have the health risks that other plasticizers like BPA do. So they're gaining share in that business, and they're also adding capacity there. I also think that Eastman has good potential in emerging markets. Through a major acquisition, they added more scale in Asia especially, and they make tire additives that are used in Asia, and that's a growing business. And we also expect some recovery in the European auto business this year.
So how about the stock? What do you like about the stock right here?
Well, like I said, I think that because of the changes the company has made, that it deserves an expansion in the valuation, and deserves to trade at a premium valuation. It has replaced its cyclical, lower margin or variable margin businesses with more higher margin, steadier, higher growing businesses. So I think that argues for a higher multiple. I also think that the company is going to enjoy, in the industry as well, significant cost advantages related to shale gas. The shale gas revolution, if you will, has really increased supplies of natural gas, which is both used for energy and a feedstock for chemical producers. And most overseas producers use oil, which is at a significant now cost disadvantage. So given these factors, I think the stock should trade more in line with, it should trade at a premium rather to most chemical producers.
How about the target price? What valuation tool are you using to get there?
I use a combination of discounted cash flow and a peer PE multiple to arrive at my $92 target price, which implies 20% upside potential from here. I expect cash flows to remain strong for some of the reasons that I just mentioned, as far as the earnings and the higher margin potential of its businesses. And I think that the stock should trade at a premium, a slight premium, 10% or so, to the market PE of, or for the chemical industry, of 13.4.
How about risks? What would you identify there?
Well, although the company has tried to specialize in its businesses in certain areas, it is definitely susceptible to economic problems or changes, especially Europe's been a little bit weak and the US was weak a few years ago, so it's not immune from economic issues. And certainly as a chemical producer, it does buy a lot of raw materials, so it is raw material movement, price movement is a risk for the company.
Great. Thanks, Stuart.
Thank you.
And that's been this week's edition of Equity Analyst Forum. We'll see you again next week.